All right, the Federal Reserve will decide whether to cut interest rates today, and this comes during what is a near-total blackout of federal economic data due to the government shutdown. The benchmark rate currently sits between 4 and 4.25% after the Fed delivered a rate cut last month, you'll remember, and that was the first cut since December of last year. Kristin Myers is back with us. She is the ETF editor-in-chief at Asset TV. Kristin, a friend of the show, great to have you back here. Welcome. What should we expect, especially considering there's such limited economic data available to the Fed? How can they make a full decision?
Yeah, so on that point, Fed Chair Powell actually already addressed this. He said that the Fed is going to be using supplementary data, primarily data that's coming from the states around employment figures, which is primarily what the Fed is looking at right now. We do have some inflation numbers. We have the inflation figures from September. They've come down a lot. There still remains persistent and some stickiness in the inflation reading, but inflation has come down. And so right now, markets are largely predicting, I was just looking before I came out, 97% probability that there's going to be a rate cut today, which is pretty much means we are definitely going to be getting a rate cut at 2 o'clock this afternoon.
So what does that tell us about the economy overall? Because the Fed's aim is to bring unemployment to a specific level. Are we there yet? Because if you look at the anecdotal data with layoffs and the difficulty people have finding a job, it's tough out there.
I mean, and just yesterday, we obviously heard that Amazon laid off 4% of its workforce, 14,000 jobs. That's not new headlines. We've been seeing a lot of companies coming out and laying off workers. And so this means probably what you might expect, that the U.S. economy, while still strong, is definitely showing signs of some weakness. We are seeing those unemployment numbers start to tick upward. We're not in crisis mode yet. We're not in a recession right now. But what the Fed is essentially saying to us is, hey, the employment numbers are incredibly important to us. And in fact, we are prioritizing them over the inflation reading. We want to stimulate the economy a bit. And so we're expecting a rate cut not only today, but we're going to be expecting a rate cut at the December FOMC meeting. And then we're expecting further rate cuts in 2026.
OK, well, that was going to be my next question, the outlook, because I also feel that the numbers and the stats tell you one thing, but when you look into the data, it really depends on where you are in the economy, which dictates how tough things are. If you're well off, as you might expect, things are fine. But for middle-class Americans and the lower income, it's challenging.
Right. And I mean, even the consumer reports and consumer surveys have said exactly that. Right now, so much of what, when we talk to a lot of Americans and we ask them about the economy, it really is about how they feel. And a lot of Americans don't feel great right now about the U.S. economy. They don't feel great about their own finances. And how could they? Well, they went from a situation where they had a lot of surplus in the bank after COVID to now, of course, they're worried about their jobs. Their savings are starting to deplete. Their debt levels are starting to rise. Now, when it comes to the outlook, you sounded just like Fed Chair Powell a second ago, because he has continuously said that the Fed is going to be, quote, data dependent, right? They are going to continuously look at the inflation readings, continuously look at the employment numbers. And so it's largely anticipated 2 rate cuts in 2026. However, caveat for that, we started 2025 with a rate cut expectation of 6 rate cuts. We did not get 6 rate cuts. We didn't get anywhere close to 6 rate cuts. So where we're going to be next year, I think, still remains up in the air. We have to continue to see how inflation continues to be impacted, especially with all the trade tensions and tariffs. We have to see how the employment picture remains going forward if we continue to see those unemployment numbers tick upward. And then we can really make, I think, a better decision on what the Fed's going to do.
Hang in there at home, folks. Kristin Myers, always great to see you. We'll have you back. All right, the Toronto Blue Jays proved to be the comeback kids as they even